Hey everyone, welcome back to Corporate Decoder, where we pull back the curtain on the financial world, and let me tell you, Super League Enterprise Inc. is serving up a spicy little transaction that is definitely worth unpacking. Get ready for some insider deal, making that could shake things up before we dive in. If you love getting clear, no. Nonsense breakdowns of these complex corporate filings, make sure you are subscribed. And hey, we've got a growing community on Discord where you can chat with fellow finance enthusiasts. The link is in the description below, so hop on over after you've watched this. Alright, let's talk about Super League Enterprise Inc. This report is all about them making a deal called a private placement. Think of it as selling a piece of the company to a select group of big investors, and it went down around October 2025. The main event here is that the company snagged some cash by selling shares, and something called pre-funded warrants. They sold over 2.3 million shares of their common stock for about $1 each. On top of that, they moved about 2.4 million pre-funded warrants, which are like special options that allow investors to buy more stock later. The price for these was just a tiny bit less than the stock price, with a super low exercise price of just a fraction of a cent per hair. So they're bringing in nearly $4.75 million before they even pay for any of the costs associated with this deal. That's a pretty nice chunk of change, and the company has big plans for it. They're saying this money will go towards paying off debts, kicking off a new corporate strategy, and just general company operations and everyday needs. Now, these pre-funded warrants come with some interesting rules. They're designed to stop any one investor from owning too much of the company all at once. If an investor's stake, including the shares they could get from these warrants, goes over 4.99% of the company's total shares, they can't exercise more warrants until they sell some of their existing shares. They can even ask to change that limit to up to 9.99% with a bit of notice. This is a common move to prevent hostile takeovers or unwanted control by a single entity. On top of buying the stock and pre-funded warrants, every investor also got a regular warrant. These are good for buying one share of common stock at $1 each. The company gets to decide if and when to buy these warrants back from the investors. This call option can happen if the stock price stays at or above $3 for 20 days straight. If that happens, the company can buy back the warrants for a tiny amount. Just 1/10 of a cent per S-hair. This is a way for the company to potentially get rid of these outstanding warrants and clear up its cap table, especially if the stock is performing well. This whole deal was put together with the help of Aegis Capital Corp. They acted as the placement agent, pretty much the matchmaker between the company and the investors. Their pay structure is a bit layered. They get commissions ranging from 2 to 9% depending on the investor. If they manage to place $5 million or more in investments, they get an extra $125,000. Aegis will also get their own warrants, a kind of bonus compensation for 5% of the shares and pre-funded warrants they placed, excluding those placed with a special lead investor. And here is a kicker. The company also issued an additional 9.2 million warrants to some folks associated with that lead investor. This likely needed shareholder approval, which seems to have been granted back in 2025. It shows how important this deal was, requiring extra steps and approvals. The company also entered into a registration rights agreement called a PIPRA, basically. This is a promise from the company to file paperwork with the Securities and Exchange Commission. Or CC, this filing will allow the investors to legally resell the shares they bought, as well as the shares they can get from the pre-funded warrants and regular warrants they received. They have to file this registration statement within 30 days of the securities being issued and get it approved within 90 days. This is crucial for the investors to eventually be able to sell their holdings on the open market. It is important to note that these securities were not sold through a public offering. They were sold under specific exemptions from registration, mainly because the investors are considered accredited investors, meaning they meet certain income or net worth requirements. They are buying these with the intention to hold them for investment, not to immediately flip them. Now, to wrap up this side of things, the company issued a few press releases. One on the 22nd of October about the initial closing of this offering, another on the 24th about an additional closing, and a final one on the 28th of October about the final closing. This tells us the deal was likely done in stages, which is pretty common for these types of private placements. Looking at the bigger picture for Super League Enterprise Inc., based on this filing, they are clearly in a growth and capital raising phase. The nearly $4.75 million raised is significant for a company of this nature, and the strategic use of these funds to pay down debt and fund a new strategy suggests they are trying to strengthen their foundation and set themselves up for future expansion. The inclusion of warrants for both investors and the placement agent shows a willingness to incentivize participation and reward key players. However, there are always risks. Issuing a large number of warrants could lead to future dilution of existing shareholders' equity if those warrants are exercised. The company is also relying on a new corporate strategy, the details of which are not entirely clear from this filing alone, so its success is by no means guaranteed. The fact that they're moving to pay down debt is a positive sign of financial discipline, but it also implies they've had debt to manage, which can be a drag on resources. In conclusion, Super League Enterprise Inc. is making bold moves to secure capital and reshape its future. The immediate infusion of cash is a clear positive, and the deal structure, while complex, seems designed to balance investor interests with the company's long-term goals. The real test will be how effectively they deploy this capital and whether their new strategy pays off. For now, it's a company actively playing financial chess and we'll be watching to see their next move. Alright, that's our deep dive into Super League Enterprise Inc. Recent dealings, what are your thoughts on this private placement strategy? Do you think it's a smart move for the company? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more corporate insights. And seriously, hop into our Discord community. We'd love to have you. Thanks for watching, and we'll see you in the next one.